Hello, everybody. Welcome to today's session. In today's session, we're going to go over the non-farm payrolls. How can you actually determine the direction in which it will be going, and how you can take advantage of that move or that prediction in the markets so that you can actually profit from it. So if that sounds interesting to you, stick with us until the end and share with a few friends that you believe will also find value in this video, and comment your biggest takeaway. So let's get into it. So we're going to start off with, we're actually on the dollar pair right now. So this was my technical analysis. I was actually waiting for prices to break below this range to create a new trend, if you will. As prices, you can see they have this as the most recent low, and prices have failed to break below here. So the trend is still bullish. We have the trend still bullish in place, and until prices break below here, we are still bullish, obviously. But that's just technical. So let's go into the fundamentals, which is why we're here. Now, we're going to start with what's non-farm payroll, right? So the non-farm payroll, here it is. It's going to be tomorrow. Non-farm payroll is the change in the number of employed people during the previous month, excluding the farming industry, right? So this is one of the biggest fundamentals that actually drives the US economy in the short term, at least, because the fundamentals always drive the fundamentals in the short term. Some of them do in the major like long term, for instance, interest rates and all that. But for instance, the non-farm payroll, it drives the fundamental or the currency pair for a short while. So for instance, here, tomorrow we are going to have the non-farm employment change, which shows a change in the number of employed people during the previous month, excluding the farming industry. That's why it's called non-farm payroll, right? So there are a couple of ways you can actually determine how this non-farm payroll is going to play out, if it's going to be positive or negative for the dollar. Now, if the non-farm employment change is greater than expected, it's always bullish for the dollar because more people are actually employed. So that's positive for the currency, right? Because more people have been employed. Now, if it comes out negative, it means it's going to be negative for the dollar, and the dollar is going to be weak. Now, how can you determine if it's going to be positive or bearish or negative, right? So there are a couple of indicators which always come out before the news in the same week. The first thing, we have this ADP non-farm employment change, which is always on Wednesday of the NFP. So for instance, if the NFP is on Friday, this ADP non-farm employment change is always on Wednesday. So this is the first indicator, which indicates how the non-farm payroll is going to come out. So for instance, this ADP, it's the estimated change in the number of employed people during the previous month, excluding the farming industry and government. Okay. Now, this one is the ADP non-farm employment change. And then on Friday, we have the non-farm payrolls, right? So here we have the employment change. And then on Friday, we have the payrolls. Obviously, so this is a great indication because this shows the employment change. And then on Friday, it shows the payrolls. So in case we have an increase in the employment, it actually indicates that we're going to have an increase in the payroll, right? It's just common sense. So for instance, this month, we had 159 in the previous month, and the predictions were that we're going to have 110 employment change, but then the actual results came out at 233. That's over 130 people, which were not anticipated, which were crazy bullish for the dollar, right? Because more people were actually employed. So it was positive for the dollar. Now, the second indication is the unemployment claim right here. And this is always on Thursday. So we have the ADP on Wednesday and then the unemployment claims on Thursday. So this is the number of individuals who have filed for unemployment insurance during the first week of the past week. Right? Now, this is also another great indication of looking at how it's going to impact the pair, right? So you can see here it also came at 216, while the predictions were at 229. So less people actually filed for unemployment, which is actually very good for the economy. So that means the dollar has more chances of being strong than being weak, because less people were actually filed for unemployment. And then the ADP also came out positive, showing that more people are actually employed in the non-farm sector. So what do you think the payrolls are going to be? Obviously, they're going to be positive because we have more employment and we have less people that filed for unemployment. So that means the dollar has a very high chance of being positive tomorrow during the non-farm payrolls. So that's how you actually read how the non-farm payroll is going to play out. So tomorrow, during the NFP, the non-farm payroll, I believe the prices, or I believe the non-farm payroll is actually going to be positive for the dollar, because the non-farm employment change was bullish, and the non-farm and the unemployment claims was actually also bullish for the dollar. So tomorrow, DXY is going to be bullish according to the data. So if the dollar is going to be bullish, how is that going to be affecting the other currency pairs? If the dollar is bullish, obviously we know Euro USD, GBP USD, and gold are inversely correlated to the dollar. So that means they are going to be bearish, right? So EU, GU, and gold are going to be bearish, whereas USD CHF, USD JPY, any pair that starts with USD, USD ZAR, they are going to be bullish tomorrow during the NFP. Do what you will with this information. But if you decide to actually trade this fundamental, kindly make sure that risk management is in play and look for a proper setup to enter before the fundamental. Don't wait for the fundamental, because there is always a lot of slippage, a lot of spread increment and all that. And most of the prop firms don't allow it, and most of the brokers actually switch the leverage during the fundamentals. So it's best for you to look for an entry earlier before and actually manage your risk. Okay. So if you found value in this video, guys, consider giving us a like, subscribe, and share with a few friends that you believe will also find value in it. Comment your biggest takeaway and which fundamentals would you like me to break down and how you can actually analyze them in the future. Till next time, guys, appreciate you all. Take it easy out there. Peace.